We're going to do a deep dive on the stats for the month of April. We've got a transitioning marketplace going on. If you've been in real estate, if you're in real estate here in the Pacific Northwest, Seattle area-ish, somewhere, you know that inventory is really low. And people are saying, Seattle pricing is down. Well, is it? And moving forward with such little inventory, what's going to happen? Let's get into what happened in April. And then let's do some projections, what's going to happen moving forward, because we're just in the beginning of our kind of hot spring market. Let's get into it. Here we go. So market dynamics are influencing adjustments in housing prices, suggested an officer at Pacific Northwest Multiple Listing Service. But with very constricted inventory, he said homes that are well priced continue to receive multiple offers. I was reading another big news story from somebody that was not in the Seattle area. And they were taking some of the stats from last month's article from this, and they were basically saying, well, I guess multiple offers are off the table for a while because we've got this, drop in sales prices, median home prices from a year ago. But remember, a year ago, things were smoking hot all the way up until the summer of 2022. And then the wheels fell off the cart because the Fed bumped interest rates, doubled them in a very short period of time, which they should have done much earlier, in my opinion. But we were told and lied to that inflation was transitory, and it wasn't. It was here for a while. And that's what happens when you put a couple of $1 trillion through the economy. And you've got things like the Inflation Reduction Act, which just did basically the opposite. More money into the economy, inflation. So the Fed has kind of come late to the game and made all these adjustments, and we're dealing with the inflation and the interest rates right now, but we've still got really low levels of inventory. Commenting on the latest statistics from the MLS, Frank Leach, vice chairperson of the board of directors and owner of some brokerage, said despite limited inventory, about 1.5 months of supply overall, that's for the entire system, it's an excellent market. As summer approaches, Leach expects to see increased activity with inventory being snapped up as it comes into the market and savvy buyers taking advantage of softening interest rates. Well, that's a nice way of saying, hey, if you're in the market, it's not a bad time because there's limited inventory. There's also limited to buyers because people got used to those interest rates under 3%, between 3 and 4%, somewhere in there, just super low. And now they're like 6.4%. People are like, oh, look at my payments on that. That is not good. No, we're not doing that. We're just going to hunker down. And that's why you've got such little activity going on. The volume of business is just a tiny fraction of what it was a year ago. So the latest report from the MLS summarizing April activity shows year-over-year drops in new listings, pending sales, and closed sales. But remember, a year ago, we were screaming. The market was hauling. It was just going, and now we're not. Brokers reported 7,137 pending sales of single-family homes and condos during April, down nearly 27% from a year ago. But notching the highest volume so far this year. So what you've got going on is this year, each month, things are getting better. But if you look at year over year, the numbers are shocking because a year ago, we had a screaming market, right? Edging out March by one transaction. Okay, so April edged out March. So they're kind of right there. Pending sales are up more than 23% from January's total. So we're getting better. It's just that our starting point was really low. So we got to work our way through this and get our way out of it. Closed sales slipped 36% from a year ago. A year ago, screaming market, remember? And so compared to January's figures, April's completed transactions surged 63.5%. So relative to 2023, things are getting much, much better each month in some categories. But compared to a year ago, not so much. It's more of the wah, wah, wah. Closed sales slipped 36% from a year ago. All right. The interesting thing is home prices have not been hammered that much. And keep in mind that the pricing that we saw at the peak of the market, summer of 2022, that was frothy. That should have never happened. That should have never happened because the Fed should have taken an aggressive approach on inflation when it saw it. But because I believe due to political situations, political circumstances, we didn't want to have the Fed dropping the hammer on increasing those interest rates to fight inflation, because then that would have been a bad look for the economy. So we had that happen. So the median price for last month's sales of single family homes and condos across the 26 counties in the report was 603,250, down about 8.6% off of a super frothy number when compared to 12 months ago. When compared to January's median price of 557,250, prices are up nearly 8.3%. So year over year, down 8. Month over a couple of months ago, up 8. So things are getting better. It's just that, the market just, it screamed upward for so long, and then it took the big deep dive. And now we're kind of slowly, okay, we're on the recovery. We're coming back up. People are used to these interest rates. And guess what's going to happen? Interest rates are going to come down. People are going to refinance, going to have a refinance boom. All that's going to happen. In King County, which accounted for 35% of last month's closed sales, check that out. There are, I think, 26 counties in the MLS. King County made up 35% of last month's closed sales. So I have brokers and I have appraisers in outerlying markets. Crickets. Not a lot going on. Not a lot going on. And that's because over a third of all the sales transactions that happened were in one county where all the employment centers are, and that's King County, right? So the median price of $790,244 fell 10% from the year earlier price of $880. A comparison with January shows prices are up 9.3%. So again, same trend. From a year ago, terrible. From recently, things are getting better. John Lennox Scott, company executive director at Yada Yada. The supply of housing remains limited due to a persistent shortage of available homes, as fewer home buyers are putting their homes on the market after locking in low home mortgage interest rates during the pandemic. Yeah, anybody who has a mortgage right now, if they're looking at selling and moving, guess what? They're doubling down on staying because they've got such a low interest rate that their payments are so low. They don't want to give that up until we get interest rates to drop just a little bit, which I strongly believe will happen. We're going to enter into a soft recession here. That's my prediction. We're already in a recession. You've already got companies closing up shop. You've got companies leaving office space. You've got companies doing major layoffs, right? I mean, we just know that's happening. Things are not going in the right direction right now. And as a result, you're in the midst of a recession right now. Scott said the limited supply of housing results in a return to multiple offers and the restart of premium pricing, especially in the more affordable mid-price and into the upper end price points. So basically all price points. But where you're seeing this take place is like in King County, where you've got very little inventory, and you've also got the employment centers. You've got the jobs. So even though big tech companies are laying off, Amazon's laid off, just Facebook's laid off, everybody, Microsoft is laid off, everybody's laid off. But again, that was after ramping way up during the pandemic because everything was happening online and all these companies were just screaming. Now you've got a higher interest rate environment. And look at what happened down in San Francisco. You've got bank failure. Yeah, that happened. So that kind of rocks the market and, stuff goes sideways. The Northwest MLS brokers added 7,300 new listings to the database during April. That total was down from both March when they added whatever and the same month ago when they added whatever. On a percentage base, the year over year drop was 37.5%. How much they brought to the market. Again, that's compared to a super frothy time period when things were rolling. So with slower sales, total supply improved compared to a year ago. At the end of April, there were 8,114 active listings in the MLS, an increase of 1,600 from a year ago supply for a gain of nearly 24.6%. The problem is interest rates are way over twice what they were before. So you don't have the buyer's pool that can afford them. When looking at the inventory of single-family homes, excluding condos, only one county has more than 6 months of supply, and that's San Juan. That is a very small population county. So if you put a handful of properties on there and they don't sell, their stats just get wildly skewed. So don't count on, well, I heard San Juan County had over 6 months. That's got to be how the entire Pacific Northwest is. It's not. That's just not how it goes. Continuing, Dealey acknowledged, we're moving at a slower pace than last year. You think? We are maintaining a seller's market given the lack of inventory along with multiple offers as a healthy number of buyers absorb what is being listed. We've got limited number of buyers willing to step in, but those that are taking down the inventory. And that's why we've still got this shortage going on. Plus, we're just not able to build our way out of it because we've had such a massive demand for housing. And the builders, one of the things on the appraisal side of things is we do a lot of construction financing for private equity firms, for private lenders. And they've been going ham because there's still a massive market. And some of our brokers, Amin over in Seattle, he runs Goose Development. They are killing it. I mean, they are going because there's still big demand for new construction, and that's what they do. Amin Shariat from Goose Development. I mean, he's doing a great job running, basically a team putting together deals to develop into new construction and then selling them on the other end. So and my son Kieran has done a ton of appraisal work on those types of projects going on, basically in King County, close to the employment centers. That's what you've got. That's what is happening. So to illustrate his point, Dealey pointed to King County. In King County, residential, excluding condos, the median price change year over year is down 12%. Well, and I take that with a grain of salt because 12% off of what? Historically high overinflated prices? Yes. Does that count to me? No, I don't worry about it. So if you're only down 12%, hey, I think that's great, considering you doubled interest rates in a super short period of time. This year, the median price has been going up steadily every month. Year to date, the median price is up 12%. From March to April, it's up over 4%. We're moving in a positive direction, he stated. MLS figures show that the median price for single-family homes that sold last month in King County was $875. A year ago, it was $995. In January, the median price was $761. So we're literally bumping up, or is that 781? 781,098. You're bumping up $100,000 on each of those increments, right? Which just illustrates we had a crazy, crazy market going. And, the Fed's done their thing and tried to slow down inflation. And here we are, right? Proper pricing is the important factor for sellers to consider in attracting buyers. I would say pricing is everything right now. Because you can't do that whole, there's nothing on the market and interest rates are screaming low. That's not a thing. You still, in this market, even though you got low inventory, you have to be priced appropriately. And we've got listings on the Summit side sitting because they're too damn high. And sellers are still like, but a year ago, we could have got this. Well, it's not a year ago. It's 2023. And you need to do a price drop. You need to reimagine your pricing. You need to do a price adjustment positively for the buyers, right? So let's see what else we got here. Motivated sellers who recognize today's market conditions with prices down from 10% from last year are attracting buyers. Yes, we see a vibrant spring market for both buyers and sellers. Yes, relatively where we've been last fall, winter, and early spring, things are going, things are moving. We're getting a little more comfortable with the market from Windermere economist Matthew Gardner. If listing prices continue to rise, one can surmise that home prices will follow suit. It's going to go up. Yep. And I think that's what you're seeing happen. So then we talk about some Kitsap County and some other stuff. And that's really about it. Let's see. Gardner expects rates will continue to move to lower with occasional spikes, and that they will hold below 6% in the second half of the year. Yes, I believe you will see interest rates with a 5 in front of them in not very long at all. Mark my words. If not, you can come back here and send me a snotty note on this YouTube video. John, it didn't happen. That will happen, right? That will happen. So Gardner also said the probability of a national recession this year is now 50-50. Well, that's basically saying it's going to happen, because I think we're in a soft landing right now. And I just do. And I think that's where they're going to call it a recession in not too long. Things will have gotten better by then, but they're going to call it a recession because you've got, these economic trends and these economic data that's basically just going to point to you. We're in a downtime. So, let's just kind of talk in general. So if you are in real estate, you've been in a hold on for dear life, a hodl, right? That's what we refer to in the crypto. You got a hodl situation going on or hodl, however you pronounce that, because you want to be one of those real estate guys that makes it through to the other end. It's always about making it through to that other end. So if you got to get a second job, if you're a mortgage guy and you need to get a second job, do what you got to do. Figure out a way to stay in the game, because this market will turn around. It will turn around. I know it seems like a long downturn, but that's only because we went through such a screaming market. You want to know a long downturn? It was called the Great Recession. It was a downturn from like 07 to 14. It was horrific. And a lot of us made it through. We weren't eating steak a lot and we weren't taking vacations very often. But we made it through and made it to the other side, and you get rewarded for that because there's less people in the pool for doing business. So if you can make it, great. If you can't, there is no shame in dipping out and maybe coming back to it down the road. That's where Summit Properties Northwest, we've got an 80-20 split. We've got no desk fee. We've got a $10,000 cap. If you're looking to make a change and you want to, get something that's a little bit more affordable while we're in this downturn, Summit Properties Northwest is an amazing, opportunity to do that. And I'd be your managing broker. So I am, professional YouTuber. I talk about real estate, but most of the time I spend my time talking literally about news for reasonable people and some of the stuff that's going on in the United States on a broader scope that, public safety and impacting real estate values. That's a lot of what I talk about. But, so bottom line here is this spring market, things are getting better. They're not back to the way they were, nor will they be. I think you're going to see better interest rates, something with a 5 in front of it, and you're going to see some activity this summer. So whether you've been in the business less than a year or 5 years or 10 years, for those of you that haven't been in the business very long, I have taken so many phone calls from really good brokers, not only mortgage brokers, but real estate brokers, primarily real estate brokers that are like, Sean, I have not seen a slowdown like this ever. And I'm like, I don't think I have either. And I've been doing this since the late 80s. I was really young when I got into this gig. So, this is one of those Wally banger slowdowns, but it's because we had such an economy and such a real estate market that was just so artificially ramped up with those, bottom basement, interest rates so low that when you tweak those rates at all, the market just, spins off of its axis. So we're trying to slowly get back on our axis. If you can make it through, you'll be rewarded. If not, check out Summit, whatever, but hang in there. That's the bottom line. Hang in there because you will be rewarded. That's all I have to say. All right. Thanks again. I will catch up with you next month. See you next month. Bye for now.